Hello traders, and welcome to today's video. My name is Yaroslav Burchenko, and today we will be discussing the news surrounding the stock market, what you should be paying attention to. In this video, you will learn how to position your trades going forward and what to expect from the currency and stock markets. Now, the latest news that has hit, the catalyst that we've all been waiting for some time, is the FOMC meeting, the Federal Open Market Committee, and their interest rate decision. Markets have been in wait and see mode leading up to this event, and the currency market especially. And the decision was a pivot from what we have been seeing over the last year. And this, as traders know, is exactly the time to pay attention. So, the decision was to keep the interest rate the same, but there were certain things that are changing, and that's what we're going to focus on today. They previously gave hints about what to expect and what their position was, and they're trying to be as as simple and as transparent as they can be. All right. So the major thing to consider is not the event itself, but what the overall market is doing, and we're going to go through that together with you today. So when I say the overall market, I do mean the S&P 500, because that is the indicator to investor sentiment. And investor sentiment is actually a very hard statistic to track. It's incredibly hard. Imagine quantifying the emotions of millions of people on the planet, right? It's almost impossible to do. But we use the S&P 500 as a general gauge as to whether investors are optimistic or if they are fearful. Now, we can look at additional clues to monitor what's going to happen. And let me go ahead and share my screen with you. And I actually use TradingView myself because it has volume here at the bottom as well, so I can actually see how many trades are open in that specific either stock market or stock or that specific market. So let's start by looking at the graph. The first thing, like I said, is the S&P 500. We have the SPY, which is the futures, and as you can see there's a bit of complacency. If looking at the past week, we were in a flat, there was barely any kind of volatility, and the volume, the most important, is when we're dropping down, the volume is actually reserved. It's not, minimal, but it's reserved. Now let's look at the NASDAQ. Here we have the Qs, which is the NASDAQ, or we can look at the NDX. The situation here is a little bit different. Let me go to the Qs because I do want to see the volumes right here. So the volume on this down move was significant. So by the way, the FOMC meeting was on the 28th and it led to absolutely no volatility, but the previous move, it had some meaning to it, some pessimism to it, if I could say that. Now, the picture that we're looking at right now is of optimism, right? The stock market is at all-time highs. We have the NASDAQ, we have the S&P 500, and we have the Dow. They are, very close, if not at, already to all-time highs. And what the Fed has done, they have realized that the economy is pushing forward and that everything is doing very, very wonderful. And so they are now on the path to normalization. Let me give you the backdrop. So let's look at the DXY, the US dollar index, and actually we have that here on the Olymp platform. When the coronavirus pandemic hit in February last year, we had the likes of, here you can go to fixed time trades and then go to indices, and that's where you can find the basic dollar index. So going back to February 2020, we see that the US dollar was a particularly strong currency, and then as the world as the optimism around the world faded and everybody became to be fearful and economies closed down, the US dollar started to fall. This was the first signal, the first clue that something was happening. And then as this spike grew, the US dollar started to be used as a safe haven currency. And we can kind of see that effect going on right now. So the demand for US dollars rose as everything else fell. Stock markets across the world fell. And so the Fed implemented these emergency growth measures, and they dropped the interest rate to nearly zero, literally giving businesses free money without having the need to pay them back, exuberant sums. There were other measures that the Federal Reserve took in forms of stimulus. They bought stocks, they bought bonds, they made sure banks didn't close credit lines. So the Fed actually bought a lot of stocks and bonds off the market. So that was like direct intervention. And now let's have a look at what that policy did. Everything that they did took the US dollar to new lows. Now, during yesterday's FOMC meeting, the interest rate itself did not change, but it stayed at 0.25%. But it was the buying program that I just told you about that changed. Have a look at this. So I have the, so here are the, we'll talk about this later. I wanted to show you guys the federal statement. So I'm on the federalreserve.gov website, and I'm looking at their statement that they gave yesterday. And the most important language that you guys need to pay attention to is right here. Last December, the committee indicated that it would continue to increase its holdings of Treasury securities by 80 billion per month. That's every month an additional 80 billion is bought out, and of agency mortgage-backed securities by at least 40 billion per month until, here it is, substantial further progress has been made. Now, if you listen to this substantial progress, this is a term that Federal Chairman Jerome Powell uses all the time, and they use it in their writings as well towards maximum employment and price stability goals. Now, have a look at this. Since then, the economy has made progress towards these goals, and the committee will continue to assess progress in the coming meetings. Guys, that language is very strong. I follow these reports almost every quarter, and the language that they used in this report is significant. This may seem like normal to some of you guys that don't follow this, but the language is quite important. So as you can see, the Fed is taking great care to be transparent about their actions, and their language is meaningful. So if we have a shift in the opposite direction, so like I showed you guys, here is all of their interest rate changes. I just want to show you guys this last change. So here we are, January 2020. This is when they changed the interest rate. February 2020, it went from 1.58 down to 0.5. Now this is the effective funds rate, so it's not the key interest rate that you guys are used to hearing. And you guys can read the write out about it down here. We won't go into detail to keep the video short, but basically this has led now to the fall of the US dollar that you guys see here. If they begin to change these policies, what do you guys think is going to happen? Of course, I don't want to be Captain Obvious here, but obviously the US dollar could grow to the previous levels of about here, and there's quite that significant, substantial period or amount that it can grow. So they are going to go from super accommodating to something more normal. And this is what the process is called. It's called normalization. And the US is one of the most productive countries, one of the financially strongest countries in the world. Where do you think their currency is going to go once they start to normalize? That's right, you guessed it, it's going to start growing. Now, let's have a look at exactly what happened in the US dollar during the 28th. So if we have a look at the intraday action on the 1 hour, have a look at this candle. This is when that report was made. The initial reaction was massively bullish, And we can have a look at the likes of the euro dollar. You guys can see that same spike right here where the US dollar significantly strengthened. pound dollar. You can even find it in the likes of gold. So the next event that you guys want to watch out for is not necessarily the next interest rate decision meeting, but it's the Jackson Hole Symposium. For those of you that are new, the Jackson Hole Symposium is a meeting in the United States where all of the central bankers from the entire world come together and discuss monetary policy and strategy going forward. And so this is the one meeting where they're going to come together, and the decision to throttle down the buying program, throttle down the stimulus, this is where it's going to happen. This is where they are likely to shift gears. And come the September 2nd meeting, the next interest rate decision meeting is on September 2nd. Come the next meeting, we are definitely going to see some action from the Federal Reserve. So you guys are on top of your game that you came to this video, and now you guys are aware of the shifting gears in the financial markets. There are some ifs to this conclusion, and I do want to get them out to you guys right now. During the press conference, you guys can also find that press conference here, but during the press conference, the chairman said, and I quote, he said that they are a ways off from substantial progress. So a ways off from substantial progress is kind of different from what we read about making substantial progress. Right here. So it seems another thing that they say right here, guys, is also very important. The path of the economy continues to depend on the path of the coronavirus. So depending on how much the virus is going to impact the world, that is going to be the path that, of course, the central bank will take. But I want to remind you, and you guys can Google this, coronavirus cases in the US are on the rise. It's like the third hit of the pandemic. So there is that hesitation from my side that perhaps everything is not so cut and paste and easy, but hey, with the markets, it never is. So COVID cases around the world are spiking and becoming significantly higher. So in conclusion to the Federal Reserve meeting, I do think that they are on a path to tapering. I do think that they are going to start this process very soon. Historically, it has been this tapering process has been the catalyst to rate hikes. Now, I know a lot of you traders, all you care about is the rate hike. But remember, we want to, as traders, be on top of when the markets shift. And this is a major market shift. That's why I'm bringing it to your attention. And so it will take some time to sink in and spread. I think in August, the idea will spread to other central banks around the world. But come September, we may see the first signs of tapering. Now, looking at the US dollar, let's go back to the DXY. Looking at the US dollar, we see that it's not reacting to the news. Like afterwards, we had a major spike down. So off of these levels, a major spike down, and the US dollar came down a little. Now, the reason for this being is that, remember that if the tapering comes, the US dollar will likely fall. But the US dollar currently is also being used as a safe haven. All right. And besides that, well, I've been looking at another pair, guys. The reality is that the markets are only now starting to price in a rate hike that may come next year, that may come sometime next year. And like I said, the US dollar is being used as a safe haven. So all of these things are actually keeping the US dollar down. There's a lot of instability in developing countries, and also the Bitcoin market with China blocking Bitcoin mining in the country. Those people have to move into dollars in order to accommodate a move to more loyal countries. And so what I see in the US dollar crosses is a move along the path of least resistance, which in the case of right here, the US dollar, the path of least resistance was lower. And you could see the same across other assets as well. Let's have a look at the British pound dollar. Right here that move was, but again, this comes after a massive spike and strengthening of the British pound. And so the path of least resistance right now, without a massive catalyst, is US dollar weakness, but it's only for the time being. Now, I'm sure all of you guys have trade ideas about, you know, if the US dollar was to strengthen, what will you buy? Actually, leave your comments in the comment section below. I'd love to know what you guys would like to buy if the US dollar strengthens, but I think that that's a more easier picture to understand. So I have an idea for you guys if the opposite hits, because a good trader always has a backup plan. So the backup plan, if the Federal Reserve, they're trying to be as kind of nonchalant and they don't want to scare markets. This is the main idea of the Federal Reserve, why they are so reserved in the way that they write, in the way that they speak, is because they don't want to scare markets. And so right now, we are looking for US dollar strength in the coming months, right? This is a long-term play. But in the short term, what if the US dollar does not react, and what if it keeps falling? Well, we have the likes of the US dollar, Canadian dollar. Having a look at this pair, guys, I'm gonna drop or expand to the 1 day and then zoom out a little bit. Have a look at this this breakout that's already in the process, and you can see that there are trading opportunities that go against that. So if the US dollar weakness continues, the US dollar Canadian dollar currency pair is an awesome trade opportunity. Definitely add it to your watch list. Now, the Bank of Canada is also outpacing the Federal Reserve with their own tapering program. So this is something that you should keep in mind, that in general, the Bank of Canada was actually the first to go hawkish, was actually the first to consider raising rates, and their economy as a commodity-based exporting economy is actually doing very well. And so really watch out for this currency pair. And also come Friday, there's a few news articles that I wanted to point out to you guys, like the Canadian GDP figures, which are coming out tomorrow, which may also offer you guys great trading opportunities if the GDP data comes out positive. As you can see, the forecast is a minus 0.3. Keep in mind that if there's a beat, that this currency pair will be a great sell. Now, there are also earnings reports that are coming up that will be specifically interesting to watch, and specifically Amazon will be reporting, guys. Amazon will be reporting tomorrow after the market closes, and the company really represents a wonderful combination of the most important factors that traders should consider. And the first one is, of course, the tech space. The tech space has been booming, but second of all is consumer consumption, They are the pinnacle of online shopping and online spending and shopping from home. So this company really reflects all of the speculative drive of last year. So their earnings report is coming out tomorrow. Make sure that you guys watch that. One last thing before we wrap up the video, I wanted to direct your attention to the valuations in the stock market. Guys, have a look at so this is Caterpillar. We also have it on our platform right here. In the Forex section. Right here, Caterpillar is one of my favorite stocks to invest in. I'm actually, as you guys can see, I have a $3,000 position opened, and the Caterpillar is actually one of the companies that is a beneficiary of the new American policy of going green, of improving their infrastructure, and also Caterpillar is a major proponent of the mining industry. Caterpillar makes mining equipment as well. And so, not to get too deep into it, when we look at a stock, the first thing that we analyze right here, this is the first kind of valuation, or the first ratio that you have, is the price to earnings ratio. In a nutshell, this is the ratio of how many years it will take for you to make back your investment. Now, Caterpillar is on the light side. They have actually one of the better PE ratios. If we have a look at the likes of Facebook, we have 31. If we have the likes of Google, we have the likes of 36. So you can see that it'll take half a lifetime to make your investment back if you invest in the stock market right now. Now, fortunately, this isn't the only ratio that investors and other people look at. So the stock market continues to grow, and value investing hasn't been a thing for the last, I don't know, 5 to 10 years. Most of the US blue chip stocks are so overvalued that they're no longer a good deal. The companies grow on inertia, and traders pile on because something is moving. That's how day traders work. And that's the way the financial instruments work. And so basically traders are squeezing everything they can out of what's happening in the markets. And it's not only the tech space. I just showed you the tech space. Let's have a look at the likes of Visa. Visa, 59 years it will take you to make back your money. Goldman Sachs. This actually isn't one of the terrible ones. 6.8 years. Not bad, not bad. So let me summarize everything for you guys. As the Federal Reserve turns more hawkish, they will lower the bond and stock buying program. They will hike the interest rate, the US dollar will return to its former glory, and it will likely grow. So keep in mind that as the central bank turns more hawkish, the US dollar will grow. And the stock market, which is heavily overheated, will take a turn for the worse. Remember, there's a correlation between the US dollar and the stock market, and it's reverse. So one of them goes down, the other one goes up. As the currency grows, the local stock market will go flat or even fall. All right? That's it for today, you guys. I hope this information brings you guys some profits. If you guys want to learn some more about trading or getting into some trading strategies, check out our YouTube channel. Subscribe to the YouTube channel. You can click the subscribe button below. Our channel is completely dedicated to this topic of improving your trading. And next week, Angie actually will conduct a therapy session with you guys, so watch out for her video. Don't leave this video a like, but share it with your friends and make sure that they also get some benefit from it. My name is Yaroslav Burchenko. I thank you so much for your time. Together with Olymp Trade, we wish you guys good luck trading out there, and see you all next time. Peace!